Hey guys, and welcome to the Working Money channel. I always love taking a look at this model here, the Bitcoin Power Law Cycle Cloud. Now, I've showed this model on the channel in the past, courtesy of APSK32, and I'm just going to play it for you guys here. It is a moving video that shows the model here, the Bitcoin Power Law Supply. You guys can see how this has been a pretty standard here. Let me just pause it here. It's been a pretty standard progression over the years. So if I just rewind a little bit here, you guys can see taking the model from 2010 all the way to 2024, we can see that price and support does correlate here, the peak exponential decay, and then there's a mathematical equation that does support that. Now, when you bring it up here, you guys can see it highlights the highs of each cycle, and it slides the pattern forward to demonstrate how, how this is repeating over time, but not in a complete mirror image. There is that exponential decay rate. So guys, if we bring it up to here, which would be the bull run 2025. First of all, they're projecting that we are going to see the top of the market near the end of 2025 or early 2026, and that Bitcoin could get up to $200,000 per coin. So, that is, the general consensus here. I think a $200,000 Bitcoin could be a bit lofty, even just putting a simple Fibonacci here on the chart. We have already retraced to the 1, came back down to the 0.786 and a 4.236, guys. Let's just see. It would bring us all the way up here. Okay, a Bitcoin worth about $243,000. So, it's a lofty goal. They are assuming we're going to get just under the 3.618. Even if we get to the 2.618, guys, I would be ecstatic, getting to a Bitcoin near $155,000. So we're eyeing this range in here. And Ali Chart's noticing this. Seems like some major players bought the Bitcoin dip. On-chain data from Sentiment has now revealed a 40,000 Bitcoin drop in exchange supply over the past 48 hours, equivalent to about $2.4 billion. So that is Bitcoin coming off the exchanges. You guys can see that here in the red. Okay, that is exchange supply. And that has gone down over the last 28, 48 hours, give or take, coming down quite significantly. That is Bitcoin, again, Bitcoin on the major exchanges. So we look at the exchange outflow rate, that is in blue here, and you can see how that has peaked. All signs that are pointing towards big institutional investors buying up a lot of Bitcoin supply and likely taking them off the exchange and putting them into cold storage. So this aligns with a notable surge in exchange outflows as well, as I just mentioned there. So wanted to thank Ali and APSK32 just for pointing that out. There's also this from Axel, guys. The average exchange inflow-outflow ratio indicates strong buying pressure. So just to kind of support that same metric that we just took a look at over here, this is the 6th time this has happened in the last 10 years. So retail investors, of course, won't react. They never will until the price is above 70,000 once again. So just another metric here, guys. Taking a look at the ratio, the 30-day moving average, how that is coming to its own. We are seeing these price declines here, number 5 and number 6. And this, guys, is when institutions are buying up. So looks like this could be the last hurrah. Again, I don't know how long this is going to last. We could see this, only for another day. We could see it for another month. Really, it is still anybody's guess. But it is good to be prepared. You guys can follow what I'm doing at patreon.com/workingmoneychannel. I'm also going to be doing a live Q&A session. I'm going to be doing a live Q&A session today at 1:30 Eastern Standard Time. If you guys are watching this video on the day that I'm releasing it, today is August the 30th, Friday, August 30th. So it's going to be for the Patreon subscribers only, for the paid Patreon subscribers. So if you guys are interested in picking my brain, I'm going to be there answering questions, patreon.com/workingmoneychannel, and I'm going to be posting a link about 5 minutes before the session. Another metric that I found interesting with regards to XRP future open interest has also surged. So it's looking as though interest in not just Bitcoin, but XRP is also going up. The drawdown in XRP price has dampened sentiment in recent times. However, key market metrics hint at a brighter trend ahead. So this is taking a look at Coinalysis, guys, and you can see over here from some of the major exchanges from Bybit, Binance, OKX. Those are the 3 top ones. We can see open interest going up. The entirety of the open interest up $423.1 million. So as of the time of this recording, it has actually gone down a little bit from the 8%. However, this article was just published yesterday. It is worth noting that the total open interest is worth about $424.2 million. So as of the time of this publication, with perpetual contracts taking the bulk of the funds worth about $421.2 million. However, there was an uptick in the futures contract, and that's an indication of a positive twist that might spell positivity for XRP. So, all things aside, we can take a look at these metrics. We can, go over them with a fine-tooth comb. At the end of the day, though, what it's really about, we're still trading in a spec market. It's going to be about Bitcoin moving, then altcoins will move. So, just to kind of put things into perspective, taking a look at the total 3 market cap, what happened when Bitcoin did move? Well, altcoins did see a surge as well. Just take a look at this. January 2024 all the way to mid-March 2024. This is, again, the total 3. This is altcoins in the market. What happened at that point on the Bitcoin chart? So basically the same exact thing, okay? January 2024 in and around here all the way to mid-March. We're seeing the exact same trends, guys. So it is not a secret. Altcoins are moving in the same way Bitcoin is moving. And so we just have to wait for Bitcoin to rip before we see more price action. Jungle Inc. here, guys, bringing this to our attention. Ripple's CLO, Stuart Alderati, has just dropped a bombshell on the SEC. He argues that the SEC's attempt to classify NFTs as securities is on shaky legal ground, and he cited a 1976 ruling that exempted art galleries from securities registration. So Stuart Alderati questioning the SEC's approach. Recently, he took to social media and suggested that the SEC can face significant legal problems if it continues the lawsuit against OpenSea while attempting to designate specific NFTs as securities. So he did quote this paper here, which is linked in this article. He highlighted a ruling involving Art Appraisers of America, which was exempt from SEC registration despite selling lithographs that had investment potential. The SEC had ruled that art sales, when not accompanied by guarantees or market manipulation, fall outside the scope of securities law. So, the SEC themselves were designating these non-securities back in 1976. The CLO, he believes that NFTs, like traditional art, should not be considered securities. He claims that OpenSea's principle, which emphasizes digital art rather than a financial investment, is consistent with this historical trend. This viewpoint may prove to be a significant challenge to the SEC's plans if the agency deems it fit to take legal action against OpenSea. So, the SEC, it's like they're throwing darts at a dartboard and hoping for a bullseye. Fortunately for the crypto industry, they really suck at playing darts. They really haven't nailed anything. I mean, it's shaky legal ground at best, it's corruption at worst, and it's probably a little bit of both. I mean, I gotta admit, that's likely what we're seeing here. Even Mark Cuban did come out recently, and he's publicly called out Gary Gensler, slamming him for poorly handling his regulatory responsibilities. Alderati's recent comments, along with the broader complaint, shows the concern and frustrations that have been emerging about the SEC's regulatory approaches to crypto. As we all know, of course, lucky for us, Ripple is out of the woods pretty much 95%. The XRP token now is set up to really kind of do its thing right now. As of the time of this recording, we're seeing XRP trading in and around 56.4. But again, guys, still trading on this trend line here, still just kind of waiting for that next bullish move to occur before we do see some meaningful movement in the space. So this is a positive sign. I know when XRP was getting below this trend line, some of us were like, what's going on now? That was, a bit of an anomaly. Then we had the Black Monday in early August. And now XRP trading up above 55 cents again. So up above the trend line. Again, guys, this is all par for the course. We are going to have to wait a little longer to see some more gains. Anyway, wanted to thank Stuart Alderati, of course, Jungle Inc., Jack the Rippler here posting this with regards to Trump, guys. Apparently, Donald Trump says he wants to make the U.S. the crypto capital of the planet. This just coming out from CNBC, guys. Trump says his plan to make the U.S. the crypto capital of the planet is coming within hours. Republican presidential nominee Donald Trump is pumping the Trump Organization's new crypto platform, which has just been rebranded the Defiant Ones, to World Liberty Financial. In a post in his 90 million followers on X, the former president shared a video of himself with a voiceover this afternoon. I'm laying out my plan to ensure that the United States will be the crypto capital of the planet. They want to choke you. They want to choke you out of business. We're not going to let that happen. It is unclear who Trump meant by they, and a Trump campaign spokesperson did not immediately respond to questions about the announcement from CNBC. But guys, this is the new frontier. This is, basically, how to put it? I mean, the beer flu really kind of shook things up. We had 4 years of, there was that. Governments around the Western world, too, are actively, I'd say, depending on how conspiratorial you are, ruining these countries in an active way. And cryptocurrency is just part of this. But guys, with Donald Trump, I think could come change. I don't ever like really making this platform political, but it's glaringly obvious at this point. Politics, it feels like it's so different now. It's either you're with us or you're not with us. But again, I don't want to make it political. But when Donald Trump is coming out saying he wants to make the U.S. the crypto capital of the planet, it's got to really bolster up the crypto community, especially in the United States. We'll have to see what happens, but I have a feeling we are on the right track. Wanted to thank Jack the Rippler there for posting that. Wrath of Kahneman here coming out with another EY report. Okay, from Ernst & Young. I did recently do a video on their most recent report discussing the percentage of XRP that institutions are holding. And again, guys, this is Ernst & Young, one of the top 5 professional auditing companies out there. I will link that video in the top right-hand corner if you didn't catch it. Well, here was another report. This one was back from April, highlighting XRPL, DeFi, and the Axelar connection. Okay, Ripple and the XRPL exploring on-chain regulatory compliance features to bolster institutional protocol adoption. And number 2, Ripple anticipates X-chain messaging protocols will play a pivotal role in attracting capital, devs, and traders. So this is directly from the report here. Ripple, in close collaboration with the XRP Ledger blockchain community, has spearheaded the development of the AMMs, enriching the XRPL ecosystem with robust decentralized finance capabilities. So talking about DeFi, of course, this is another facet of really kind of leveraging the XRPL's benefits for more application. Notably, the XRPL's existing decentralized exchange, the DEX, has traditionally relied on conventional order book mechanisms, lacking some of the advanced features prevalent to newer DeFi protocols. However, Ripple's introduction to the AMMs marks a significant step enhancing DeFi offerings on the XRPL blockchain. Again, guys, this is from Ernst & Young's report from back in April that we're just discovering now. According to Ripple, the AMM represents a foundational element for future DeFi innovations on the XRP ledger. Moreover, integration with cross-chain messaging services like Axelar is expected to enhance the interoperability and utility of DeFi solutions built on the XRPL blockchain. Interesting. A great segue into this next clip. This was a Ripple discussion panel, guys, from Multi-Chain Nation. Axelar was on the panel. Jazzy Cooper, head of DeFi products from Ripple, was also on the panel. And Vet decided to cut this interview. I'm going to play you guys a little bit right now, basically discussing Axelar and how they are a multi-chain distribution system and how they're leveraging RippleNet, guys. Listen to this.
With XRP Ledger and real-world assets.
Yeah, I think if you look at the more tangible side of it, what's concrete, look at what like Mountain Protocol or Ondo or Midas, some of these issuers are doing with yield-bearing stablecoins and how quickly they're recognizing adoption through ecosystems. And similar to what people have seen with Circle, building native USDC on-ramps is difficult and it's resource intensive. And so what ends up happening is beyond where Circle represents native on-ramping, there are Axelar wrapped, USDC, there are other bridge wrap USDCs, and they're well adopted because there's more demand for these assets than the issuers can necessarily scale. And it becomes complicated when you start working across different VMs. And so you see the same thing with these yield-bearing stablecoins. There's huge demand for them in DeFi across different ecosystems. And those teams have looked to Axelar as a distribution channel for them to be able to move more quickly than they could otherwise to get those assets in the hands of users and applications. And we think if you look at everything that Ripple is doing and where they're strategically positioned around institutions and enterprise, this is going to be a huge opportunity for us to tokenize new real world assets and then distribute them to the rest of those ecosystems that we're working with now. So that's certainly on the very concrete, tangible side, looking at that. And we're very much interested to see where the larger financial institutional space moves, how quickly they're able to find comfort to really tokenize certain portfolios of assets. But publicly, you can take a look, look at what JP Morgan did with Project Guardian and take a look at what Deutsche Bank is doing now with Project Guardian. And the work that they're doing with Axelar will be presented in November. So kind of wait for them to share a little bit more about what they're testing in this proof of concept. But this stuff is, we're on the precipice. We are finally getting the pieces of infrastructure in that we're really moving forward. And so I think that we're very excited about it. And we think that Ripple can absolutely end up being one of the major hubs that kind of creates that first step that brings on those larger financial institutions.
So I'm going to cut it there. You heard how cumbersome working on the USDC platform is. So Axelar wrapping stablecoins, of course, this is aiding more adoption as we're seeing, more use cases for stablecoins becoming more prevalent. A lot more companies want to start using them, probably for trade and for other purposes. So the Axelar network working together with Ripple, this is going to be a slam dunk. So here Vet just talks about Axelar as the multi-chain distribution system for Ripple's institutional customers. And Ripple will hold tokenized RWAs on their balance sheet, so real-world assets. And Axelar will have the ability to bring yield-bearing stablecoins to the XRP ledger. Now, I'm going to be playing some of this video later on in a video that I'm planning for this afternoon. But for now, I wanted to kind of stay on track with this concept of, the US stablecoin, how we're seeing US banks really kind of bolster their adoption and how it's coming very, very soon. Smoke here reminding us of this. Both Brad Garlinghouse and JP Morgan expect US stablecoin regulation to be passed before the election this November. Guys, that is within the next couple of months, okay? So stablecoin regulation passed before the election. Ripple did set out to launch a stablecoin in a crowded $150 billion market. This was from back in April, as Ripple did announce the RLUSD. The stablecoin may pass before the election, says JP Morgan. Again, this was back from June. So we have all these statements here coming both from Ripple and JP Morgan. I think they're probably on the same page because they probably have the same inside source. Garlinghouse says he expects a stablecoin bill to be approved before this year's presidential election. This is, also part of the reason why I'm sure Ripple has been working behind the scenes to work on their RLUSD, so it's ready to go. Basically, as soon as those regulations come into effect, Ripple has the stablecoin ready, and they're probably going to hit the ground running with that. The stablecoin bill is likely to be approved before the presidential election and poses a threat to Tether's dominance, according to JP Morgan. So, echoing those same statements. Interesting. Wanted to thank Smoke for pointing that out. Now, Ame Lee also bringing this up, okay? Speaking of JP Morgan, this is Jamie Dimon. JP Morgan moves $10 trillion every day. JP Morgan's cross-border payments could drive XRP to $1,000. Well, first I'm going to play you guys this clip. Then we're going to talk about XRP adoption and possible price movement. So what JP Morgan does, we move $10 trillion of money around the world every single day. We bank some of these companies in 30 countries. We bank countries, we bank the world, the IMF bank, United States government. You have to evict. You can't do those things to be small. I applaud the small banks, but we are the biggest bank, community banks and regional banks and stuff like that. I understand you have some stress around here. We're trying to help it, and so we're doing this with JP Morgan. So JP Morgan, the biggest bank in the US, they bank everybody, and they have to be big to do this. $10 trillion every single day. No, that's not a year. That's not even a quarter. That is every single day. So Emily also posted this NASDAQ article in the description. XRP price forecast, JP Morgan cross-border payments could drive XRP to $1,000. Now, this came from one analyst back in May. But basically giving us a sense of how XRP could rally. And I mean, I don't know if this is just an arbitrary price here. XRP's utility in cross-border payments, especially as utilized in Ripple's on-demand liquidity products, has contributed to the bullish sentiment surrounding the cryptocurrency among market participants, and this utility has caught the attention of multiple payment entities over the years. Last December, JP Morgan did report that Ripple and XRP as entities could help unlock $120 billion trapped in cross-border payments. The Crypto Basic also revealed in November of 2023 that Grayscale highlighted XRP as a potential alternative to SWIFT in cross-border settlement. So how do we get to $1,000 per coin? Liquidity. Here is Mason's XRP liquidity cheat sheet, essentially stating, there is a need for liquidity in the market. Ripple has been working tirelessly to make XRP that liquid cryptocurrency. Once there is liquidity for XRP, guys, more companies, more banks, especially like JP Morgan, will leverage it for the $10 trillion that they have to move every day. And with this XRP demand, guys, supply is going to diminish. If you didn't catch the video I did yesterday, there was a live video of XRP transactions going through on the ledger. And you guys could see those transactions very small at the moment. And this is because we just don't have the real world utility yet. If you guys didn't catch the video, I will link it up here. But basically, with the stablecoin, with more driving factors, driving US adoption, guys, this is how we're going to get XRP price even higher. Now, Jay Grissom bringing this theoretical concept to light here, okay? Things are getting interesting when we actually do the math. So he's saying this is food for thought. when you break down a Bitcoin into Satoshis, okay? So think about Bitcoin, it is divisible by 8 decimal places. If you compare it to XRP and drops, so XRP drops are divisible to 6 decimal places. The actual total supply is only 47.62x, so 47.62 times more XRP. All things being equal, if they're both being used for their utility and not just being hyped, a $59,000 Bitcoin is comparable to a $1,238.97 per XRP. Fun stuff to think about. Math makes the truth a little bit easier to see, guys. The best part about this is a $59,000 Bitcoin is $59,000 when it is not being used for anything, literally nothing. This thing is being used for nothing. We have XRP being utilized. We have XRP being a problem-solving cryptocurrency, a real-world utility asset. And guys, it will actually be used for something. So there'll actually be organic demand for XRP, and not just in a 4-year cycle. There'll be demand for XRP every single day, 7 days a week, 365 days a year. So, you know, that just means the potential for XRP could go higher and higher. And think about how economies work, right? GDPs, governments want the GDP to go higher and higher. That means more trade, more global business. Guys, these are all factors that will drive XRP up over 4 digits one day. Let's focus right now on the spec market though. And for more information on what I'm trading, what my trading strategy is, and what my targets are when I'm going to sell out of all my cryptocurrencies, you can follow that at patreon.com/workingmoneychannel. But again, that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.